Have you ever had a crush on someone that you really like, but they just don't feel the same way about you? That's me and the NASDAQ, who I have this ongoing one-way love affair for. But maybe it's all turning around. Maybe she's showing some attention to me today. Anyways, let's move past this because it's weird. But I want to talk about the NASDAQ, the Dow, the S&P. I want to talk about gold and the dollar and everything else, which is exceptionally interesting today. All of that we're going to get into in this video, so stay tuned. Let's jump in. Welcome back to the channel, guys. Today we're going to be covering everything from indices, commodities, and more. I want to just ask as we get started, if you could do me a big favor and hit the thumbs up button on the video here. It really does help just to support what we're trying to do on YouTube, and subscribe if you're new. I think we're, what are we at, like 400 something thousand subscribers. You guys are amazing. Thank you for your support. Let's jump into some charts. Now, I want to start first by telling you guys where I'm positioned. This is something I do every day in my videos. That's kind of the purpose of my channel, is just to share with you guys what I'm doing in the markets, and more importantly, why. I want to talk about two trades that I entered today and a third trade that I'm already in and is showing some promise. Let's first take a look at the NASDAQ. The NASDAQ has been one that I mentioned in the opening parts of this video. Things have not been going super well for me on the NASDAQ, but I entered into another trade today, and this is my third attempt on the NASDAQ. Now, I want to break this down because I prefaced this when I first got long the NASDAQ that I often take multiple attempts on a particular trade idea. The reason I do that is because markets are hard to time. A lot of times I think the bottom is in and then it goes lower, or the top is in and it goes higher. The point is, it's very hard to time the bottoms and tops of markets, but generally speaking, I feel that my strengths are identifying trends, macro fundamentals, and most importantly, position sizing is my personal superpower. I will say I've acknowledged, that my entries are not always the best, but my fundamentals and my position sizing are my personal strengths in the financial market. You guys might feel like you're more entries, exits based, or, maybe you also feel similar. Maybe your fundamentals are your A game. But for me, fundamentals and position sizing are my A game. And I willfully say that entries are difficult. So I took an attempt on the NASDAQ right around this level, and price did initially look promising, but then rolled over and collapsed through the 50-day moving average. Now we tagged the 100-day moving average this morning. We saw a sharp rejection to it, and I actually got long the NASDAQ for my third attempt at getting long on it. We've also got some support in this area. From a technical perspective, I like this setup. Now, I also will say, just like with my previous two attempts before this, I could be dead wrong and the market could roll over, in which case I'll just bail on the trade and stop out. So this is the purpose of stop losses, and I've actually been very thankful for having stop losses on my trades because I've had a couple losers that could have been much worse if I didn't stop out quickly like my stop loss and my trading plan told me to do so. So I am long the NASDAQ, and we're going to talk about why. But what actually showed up on my screener here is that we've still got a bullish setup overall for the NASDAQ on the EdgeFinder. Now, I want to talk about this because why is the EdgeFinder still bullish? Well, here's what I want to point out to you guys. The commitment of traders data, which shows us what institutional money is buying or selling in the latest round of data, showed some clear buying for the NASDAQ. Check this out. If we take a look at this, you can see that the overall positioning is slightly favorable to the NASDAQ, 52 to 48, let's call it. But there was some slight buying. Now, on top of that, we also saw clear buying for the Dow Jones, which, to preface my next trade idea, I went long the Dow Jones today. We'll discuss that in just a moment. This one was one that I was excited to get into and finally saw the pullback form. I went long the NASDAQ. We saw huge buying. We saw a huge number of increases in long contracts and a very small increase in short contracts in the latest week-to-week filing. Now, what am I looking at right now? This is the EdgeFinder. The EdgeFinder helps me spot trading opportunities. It is primarily, it's my engine to my trading. Technical charts are pretty and fun, and it's fine to draw up pretty pictures, but ultimately, where my trading ideas come from is the engine to my trading system, which is the EdgeFinder. And this isn't my trading system, but this tool, the EdgeFinder, is a algorithm that basically pulls in a bunch of data and generates bullish and bearish setups based on that data. And we can look at a lot of stuff here. I want to talk a little bit about why maybe the economy, or maybe why the markets are a little bit fearful right now. And I think a large part of it is concerns in regards to the economy. Also, if you're not already aware, we are currently doing our summer discount sale for the EdgeFinder. It gets you access to the tools that we offer all inside one singular platform, our top setups algorithm, the commitment of traders data, and so much more. It's currently half off. It is our biggest discount that we do all year long. And if you're someone who regularly watches my videos and would like to get this engine that I use behind my trading, as well as many other traders around the world are using, you can currently get it for the biggest discount of our entire yearly plan. We do not go lower than 55% off, which is available to my subscribers. So we're doing 50, but people who are watching the video right now can get 55% off the EdgeFinder. Clicking the link, the first one in the description down below, will connect you to a member of our team who can get you information as a subscriber for that 55% off discount. We can also see that in the yen, right? The yen has gotten really strong. Look at this. We almost tested the 200-day moving average with this recent sell-off. Huge pullbacks to this really strong upward trend that we've seen. But why the yen? Why is the yen strong? Well, it's because other central banks, other economies around the world are sensing some weakness. And let me show you this. So if we take a look at like services PMI, for example, we've talked about this a lot in the channel recently. We've got this sloop in services PMI, and we can go down the list. A lot of you guys might be familiar with some of these points that I'm about to make, so bear with me. I think it's good to reiterate and practice going through this over and over if you're an EdgeFinder user especially. So the retail sales, right? 0% growth month over month, 0.1% growth, 0%. These are just not very impressive on the retail consumer facing side. Compared to that over here, I mean, look at this growth. We saw steady month over month growth for retail sales. This is a sign of slowing in the economy, right? But it doesn't end there. We can also take a look at manufacturing PMI, which has consistently been below the 50 point. So we see the economy being a little bit weak, and perhaps a little bit more weakness than what Wall Street was expecting is why we're seeing the sloop in the markets. Now, I know a lot of people say, no, it's because Kamala Harris is likely or more likely to now be the president, or Donald Trump is going to cause a war with China. I know that there are speculations about that, but in my personal experience, politics are secondary to what the Fed is doing, and what the Fed is doing is watching the economy and inflation. And these are the most important things. You guys know, if you're a regular, fist bump the screen right now, you know what we're really after on this channel. We are not here to argue politics. I think it's a fool's game personally. And I think if you're here to make money, the reality is, let's face the realities of what makes this market go up and down. It's the fundamentals, the economy, not who's going to tweet what, right? That's, I think, a game of chasing your tail. We can look at economic data. We can try and gauge what the economic outlook is looking like, and we can try to better forecast what the Fed may do next. We can do that stuff, but we can't predict what Kamala Harris or Donald Trump is going to say, or how their policies are we can't predict exactly what their policies are going to be. So let's focus on what we can kind of build a strategy around, which I believe is more on the economic data. So if you're on the same page, if you resonate with what I just said, I just want to get you guys to do something fun in the comment section. Comment the word Fed. If you agree with what I just mentioned, that who becomes the president is secondary to what the Fed does and chooses to do, comment Fed down below. So we also have more evidence of a slowing economy. Let me show you. So if we take a look at labor data and we look at things like job openings, which have been slowing in the US, and we see unemployment rates starting to bottom out and starting to roll up higher. We got wage growth also kind of slowing in the US. The consumer is feeling a little stressed out, and who's to blame them? Prices are high. Job growth is not slow, but slowing. And, again, the strength of the consumer seems to be waning. And that brings into question whether or not, these prices for stocks are valid or not. Now, that's the bear case. Let me give you the bull case, because I am definitely more on the bullish side, because I also bought the Dow Jones today. Why did I buy the Dow? I bought the Dow because I think that we are going to see overall continued growth, and also that growth might be accelerated or spurred into existence too by the prospect of interest rate cuts. So this was my second entry today. So I've got a couple trades on. I'm long the Qs, which is the NASDAQ. I'm long DIA, which is the Dow Jones Industrial Average. Actually, let me pop this open so you can see it. And I'm long TLT, which is long duration bonds. These are my three current positions. You'll see I'm not long gold. I'm not long silver. I've gotten out of my metals trades, and I'm really kind of planting my feet here in some of my more convicted areas, which is the Dow, the NASDAQ, and TLT. So why? Let's go through the Dow Jones. So the reason I really like the Dow here is because similar reasons to why I like TLT. Now TLT, let's just briefly talk about this one. This is 20+ year treasury bonds, and it's in an ETF form. So this ETF holds a bunch of long-term bonds, and with those, like treasury bonds specifically, so lending to the US government. So why would I be long this? Well, I think that interest rate cuts are coming because inflation is cooling and the economy is showing signs of weakening. That tells me, okay, I want some exposure to bonds because, again, bonds will go up if interest rates go down. That is how they generally work. On top of that, let's talk about the Dow. So when we talk about the Dow Jones, which is up today nicely, well, not really up nicely, but up on a day when everything else was selling off hard earlier. Let's talk about this. So the Dow Jones has a lot of value companies, and it also has a lot of dividend companies. Okay, let me elaborate. So the Dow Jones has a bunch of what many people would call blue chip companies. Blue chip companies, like when you go to the casino and you see them, like all the different chips laid out, the idea is the blue chip ones are the big buck, casino chips. That's the one everybody wants. Those are the stable, companies in the market. And in fact, let me show you some of the companies that are in the Dow Jones really quick. So what we can see here is if we zoom in a little bit on this, we've got all of the different companies that are in the Dow Jones, which is a composite of 30 different companies. Now we can see the different ones and their weighting within the ETF DIA. What we can see is United Health in here, Goldman Sachs, Microsoft, Home Depot, Caterpillar, Amgen, Visa, McDonald's, Salesforce, and you can see the list goes on and on. You got Honeywell in here, JP Morgan, Johnson & Johnson, Procter & Gamble, Coca-Cola, Walmart, Nike. Now, why the Dow? Because the Dow is mostly stable companies that people feel are relatively predictable. People feel like, not even feel, they just have pretty predictable earnings growth, pretty predictable. They're not so speculative, if you will. And so I like the Dow in a time where we don't know what's going to happen with the presidency. We don't know what's going to happen exactly when the Fed does what. But I do think, generally speaking, we're going to see the Fed cut rates. Now, the Fed cutting rates means something very important to the Dow. I mentioned value and dividends. Dividend companies pay out, regular payments to their investors. So if you're holding JP Morgan, right? JP Morgan, JPM. Sorry for the terrible P there.
Jammed.
JP, it looks like I spelled the word jam. That's JP Morgan, right? The big bank. That company pays you dividends for holding on to it. Over time, every quarter, they pay a dividend. And the reason I bring that up is that dividend has been not exciting to the market when tech stocks are flying high. But now that the market is seeing rate cuts coming, and the market may not be able to go further, go much longer and keep buying bonds to collect a positive interest rate of, the 10-year treasury is offering 4.2%. Most dividend companies are paying between 2 to 4%. Dividend stocks pay around that range. So dividend companies are not looking so attractive because you could just get risk-free money by investing in bonds. But if rates come down and that is no longer an option, right? If it's no longer, if rates come down on the 10-year yield, let's say they come down to 3.5% over time. If we see yields come down big time and you can only get 3.5%, but you could get 4 to 5% with dividend stocks, suddenly dividend stocks look more attractive. Do you see where I'm going with this? The point is, today, as the economy looks like it's slowing, people may opt in for stable, reliable companies, and that's the value part. And they may also opt into buying dividend stocks because they're going to become more attractive if bond yields fall. If people, the older investors looking to kind of cash in on just kind of high yielding things and just kind of chill in their retirement phase, they like dividend stocks because they pay reliable income for them. That's becoming more attractive in my opinion, and that's why I'm long the Dow. So I know that was a long story, but I broke this down inside of our Discord channel. I just want to show you the trades that I took and more importantly, why So every time I take a trade inside of our group, you get notified. If you're inside of our Discord channel, you can find out information on this down below in the description if you are interested in joining. But I will be capturing and sharing all of my trades directly inside of our Discord channel. I went long the Dow. I explained why buying blue chips, as I mentioned. Value companies tend to perform well during a Fed rate cut. Overall upward trend. We hit the 20-day moving average. Stop loss below. I mean, I like the trade. If I'm wrong, I'll stop out. I'll take a managed risk or managed loss. Again, I'm not going to lose the farm on this trade. I'm taking small controlled risk per trade here, and we'll see how it goes. But again, I like this dip. I'm buying this dip across the board. If I'm wrong, I'll pay for it and I'll be public about it on YouTube. But if I'm right, we might make some good money here. So that's my opinion. Do your own thing. It's not financial advice ever on my channel. I'm doing my own thing, sharing my opinions. And remember, don't miss out on that 55% off discount on the EdgeFinder using the first link in the description down below. If you're looking for a better brokerage, then stick around for a second. I'm going to tell you how you can get some free sign-up perks with great brokerages all around the world. Whether you trade FX or indices, commodities, futures, all of the above, I'm going to show you a really cool way that you can get free sign-up perks with your new account. So if you're interested in switching into a different brokerage, you can get things like deposit bonuses or free stock shares, or you can even get access to some of our products for completely free. All you have to do to find out current perks being offered to new depositors is go to a1trading.com/brokers. That's a1trading.com/brokers. And as you look at that page, you'll see all these different offerings that we've currently locked down for you guys as subscribers, as viewers. Now, of course, we get something out of this. If you choose to use these links, you'll be supporting our page. But in return for the viewers, we've got great sign-up perks available for you guys so that you get some free game just by signing up for a brokerage if you're looking to do so. So check it out on our website. You can find current deals at a1trading.com/brokers. Thanks for watching this video, and on the screen right now you'll see some other options of other videos we put together that might be helpful to you in your trading career. So thanks for watching, and we'll see you next time.